Trading a particular pair in its particular section will increase your profitability in the market. I mean what I said. Now, in this video, we'll be talking about kill zones, how they work, and which particular pair that actually works with them. Now, you see, there's something we call volatility in markets, whereby markets will be moving from one particular place to another particular range in a specific time very fast. That is called volatility. Now, trading, for example, you are trading USD card in the Asia section, because we have three sections. We have Asia, London, and New York Killzone. If you are trading the USD card in the Asia section, market will not be moving because that particular pair is not meant for that particular section. You understand? So Asia section are meant for JPY pair, while London sections are meant for GBP pairs, and why New York section are meant for USD pairs. So in this particular video, I will show you guys a strategy that I use to trade my London Killzone strategy with a profitability of 81% profitability. Trust me, this particular strategy will make you a lot of money. Now, first of all, let's start by explaining three main sections we have in the market. We have so many sections. We have Tokyo section, Eastern section, London section, New York section, and so many other sections. But today, we'll be focusing on three sections: Asian, London, and New York Killzone section. Now, this strategy is called London Killzone strategy. Now, we're making use of the London section only, and we're making use of two pairs. You can trade this particular pair with GBP USD. You can also trade it with Euro USD, and you can also trade it with gold. But I think it doesn't work perfectly on gold. Only I think on GBP USD and Euro USD. So now, if you're trading the New York section, you'll be looking forward to trade with USD card, gold, and the other USD correlated pair. So now this is how the Asian and New York section breaks works. Now, for example, during the Asian section, you see something like this, because this Asian is all about consolidation. You see something like this in the Asian section. Then this happened between 2 a.m. in the morning to 5 a.m. in the morning. That's when this particular thing used to happen. Then the London section kick off exactly 7 o'clock a.m. or 8 o'clock a.m. depending on time shift zone. So in Nigeria, it works, I think, at exactly 7 o'clock in the morning a.m. till 10 o'clock in the morning. And you see something like this. This is how the London Killzone looks like. And again, the New York section will be a continuation of the London section. So let's differentiate this. Now this is the three sections that you have: Asian section, London section, and New York section. Now, what to expect price, or what we expect to see price do in our Asian section is what we call consolidating. Price need to consolidate in our Asian section, creating liquidity for the smart money. The smart traders, they trade exactly 7 o'clock London time. That is when the London market will be open, and you start seeing like unexpected spikes up and down. Yeah, exactly at 7 o'clock in the morning. Now, all this is just a liquidity creation, because you can see liquidity be residing above here, and on that set of liquidity will also be residing below here. You understand? Now, best way to trade this particular strategy, what you need to do is, after seeing this liquidity, after seeing this consolidation in our Asian section, you wait for a sweep of liquidity. Remember, as a SMC trader, sweep of liquidity is one of what you need in the particular market. Now, you wait for a sweep of liquidity to the upside or neither to the downside, any particular one. But in this scenario, we'll be going to the downside. Now you can see price sweeps liquidity to the downside, and after a sweep of liquidity to the downside, we'll be expecting a change of character to the upside. Then we'll be buying this particular market. As easy as that. Something like this. A change of character down to another block, and boom. Then the London closes, New York open, and the same thing continues, a continuation. Now, if you want to sell, all you just need is a sweep of liquidity to the upside After that sweep of liquidity to the upside, after price sweeping all this liquidity residing here, you wait for a change of character to the downside, then you enter from what? You enter from your order block, and before you know it, boom, price starts moving to the downside. As easy as that. You don't need any other confluence, just this particular price movement. Now we're diving into the real chart. We dive into the real chart to see what we have in the real chart and do a little back test before anything. You understand? So now one more thing I need to tell you guys is that your risk to reward ratio, a perfect risk to reward ratio that is to work for this thing is 1:2 risk to reward ratio, but you can use 1:3 depending, and you can use a maximum loss pips loss of 20 pips and a maximum profit of 40 pips. Anything above that, you are greedy, because basically the market prints at least from 10 to 60 pips during the London section and can print as big as 100 pips, 200 pips during the NFP week in our New York section. You understand that, guys? So now diving into the market, I'm going to teach you guys how to get the indicator. You go to an indicator bar and you search ICT section Killzone box and deviation by this particular man here. After that, you can put it in your favorite, or you can test this strategy and backtest it to see how the strategy is going to work for you. Now the time frame we'll be needing is 2 time frames. We'll be needing our 15-minute time frame. It works only in the 15-minute time frame and the 5-minute time frame, but basically I only use one particular time frame, which is the 5-minute time frame. Now go down to a 5-minute time frame. Let's analyze, let's backtest this strategy. In a 5-minute time frame, now looking at this particular chart over here, now you can see something. You can see that this is on Tuesday last week, and this is our Asian box. This is the Asian box. This is the New York London box, and this is the New York box. You understand that, guys? If you want to set this thing, once you get the indicator, let me show you guys my setting. Screenshot it so that you can be able to set it exactly as I do in my own. This is my setting, guys. This is my setting. This is my setting. Screenshot it so you can be able to do it in your own. Yeah, I think my battery is down. Okay, now guys, so after seeing this particular sweep of liquidity to the upside, looking at this is our Asian box, and price did what? After consolidating for a long time throughout the midnight, price swept liquidity to the upside. And remember from our illustration, after the sweep of liquidity to the upside, we'll be looking forward to sell. So therefore, we'll be expecting a change of character to the downside before stacking in our sell position, because price swept the high. But assuming price swept the low, we'll be looking forward to do what? To buy. So now this is also our 15-minute time frame, 5-minute time frame. We're not going anywhere. Everything is happening in this 5-minute time frame. This is our exactly change of character that we needed. This is it here. And after seeing this particular thing, we mark at our order block, because we'll be trading from our order block also with a fair value gap. And this is a fair value gap. Yes, this is a very big fair value gap over here. From here to here is a very big fair value gap. You understand, guys? So after this, we'll be stacking in our pending orders. Put our pending order here. And for your stop loss, you check the previous high of the market. Our previous high was supposed to be here, but we'll put it above here for liquidity sake. You understand? Shift it down here. How many pips is this? Let's set this thing. Okay guys, so we're in. Now this is 13 pips. Okay, 12 pips. Okay, 12 pips of stop loss, and our take profit should be at least 1:2. 1:2. You can see before the London section is over, before 10 o'clock, if you're already out of the market with a very big, massive profit, as easy as that. But you can target your stop loss to this, your take profit to this particular area here, which is the low of the former Asian. You understand? And it's also believed that this particular movement form the high of the day and also the low of the day. You understand? If price sweep above, then price has already formed the high of the day. If price sweep below, price also have already formed the low of the day. Now you can see this particular movement, and price gave us a 1:2.8 risk-reward ratio and a clean move. Now let's continue going. Now looking at this particular market, you can also see this. Now in this particular scenario, price swept above, but in this particular place, price, yeah, the same thing. Okay, yeah, the same thing. Now looking at this particular man over here, now what you need to do is just, after this sweep of liquidity over here, you wait for a change of character to the downside, because we are selling. If price sweep above, we are selling. If price sweep below, we are buying. Now this is our break of structure, but not a good break of structure. So this is not a valid break of structure, understand? Because our other block over here does not have fair value gap. So this is our valid break of structure over here. A valid break of structure, and this is our other block, because this our other block has a fair value gap. You can see a fair value gap over here. So this is a valid order block. And after seeing something like that, you just put in your pending order. Your stop loss will be above this particular high over here, above this man over here. Yeah, that's where your stop loss is supposed to be. And our take profit should be below this low over here, and that is it, guys. So we are in, and what is this? Give us 1:3, and we are out. It's a take profit for us. And this again, this is on Thursday. Now judging from Thursday, you can see price step in this particular scenario, we are buying, because price did what? Price swept the low, and anytime we have a sweep of the low, we are going to the higher time frame. Now this is not our break of structure, because this break of structure did not happen in our 5 minutes time, in our during the London zone. It happened outside this particular London zone. This is a pre-market zone. It happens outside it. But once London market opens by 7 o'clock, we look for a new break of structure inside that particular place. Remember, we are still buying. So therefore, this is it here. This is the break of structure here. And this is our other block. But this other block does not come with a fair value gap, guys. No fair value gap over here. You can see no fair value gap over here. But this is the old low. This is the old low. This is the old. This is the old low, and this is the old high. So I think this particular entry, left for me, I will say no. I will not enter it, because I need the fair value gap as a confirmation. The only fair value gap we have here is here, and price has already made together fair value gap already. So I will miss this entry, because price can also use this particular place as a liquidity. This particular place as a liquidity to tap into this other block here and sweep us out. So we'll leave this particular one. So in this particular one, this particular scenario over here, this is a fully sweep to the downside. Okay, no, price swept above. This is it here. Yeah, price gave us a sweep of liquidity to the upside, so therefore we're looking to sell. So therefore, now looking inside this particular range, there's no other block, there's no break of structure in this particular range, no break of structure to the downside. And once it's 10 o'clock, the market closes. Once it's 10 o'clock, the London section closes. We work with time. If the break of structure does not occur between 7 o'clock to 10 o'clock or to 11 o'clock, no more trading for that particular day. As far as you are trading the London Killzone, we work with time. You understand? Price must sweep above of Asia. If price sweep above of Asia, then we'll wait for a break of structure to the downside, or a change of character to the downside to happen inside that particular zone from 7 a.m. to 10 a.m. before we sell. You understand? But if price sweep below of Asia, we're waiting for the break of structure to happen inside this particular zone to the upside before we do what? Before we buy. So this is it for this week, which means this week we had only 3 clean sheets on